Welcome to today's Explainer, guys. So I want you to imagine standing right on the edge of a cliff, just waiting for a single gust of wind to either push you back to safety or send you right over the edge. Well, in the financial world, that is exactly where the US dollar index is positioned right at this very moment. It's wild. Tonight is setting up to be a high-stakes clash of market forces, and the tension, you can literally feel it. So let's break down exactly what's happening with the dollar, what's actually driving it, and how we can navigate the critical catalyst hitting the markets tonight.
99.90. Now that's not just some random data point. It is a psychological tripwire. Right now, the DXY is completely paralyzed at this exact level. It's like the market is too afraid to push it aggressively higher, but at the same time, they're fiercely defending it from dropping any lower. And understanding exactly why the dollar is stuck here, that's your key to anticipating what's going to happen next.
Okay, let's dive into this chart. The sheer volatility leading up to this moment has been absolutely intense. I mean, just earlier this week, the DXY took a severe hit, plunging all the way down to the 99.40 mark. It honestly looked like the floor was just falling out. But then, it managed this incredibly fragile recovery, just crawling its way right back up to this pivotal support zone we're hovering in right now. But here's the thing, it didn't bounce back because of some undeniable economic strength. No, it bounced back because of fear.
Section 1. The precarious state. Let's look at exactly what threw the dollar a lifeline when it was sinking. So as I mentioned, the dollar's recent recovery wasn't driven by domestic triumph at all. It was driven by global anxiety. First off, we've got rising geopolitical tensions in the Middle East that have just put global markets on edge. And second, intricately tied to that, we saw these sudden, really sharp spikes in crude oil prices. And you know how this goes. Whenever energy prices threaten to disrupt the global economy, institutional money gets scared. And where does it go? It flows directly into the ultimate safe haven asset, the US dollar. So these flows are acting as a temporary floor, basically keeping the DXY propped up for now.
Section 2. Holding breath for non-farm. Because the reality of these safe haven flows is that they are reactive and temporary, and short-term momentum is now completely locked up waiting for the real catalyst.
This all builds into the ultimate macroeconomic puzzle for the Fed. Step 1, those rising oil prices we just talked about, they spark massive, renewed fears that inflation is making a comeback. Step 2, because of that fear, markets are betting the Federal Reserve might actually be forced to maintain high interest rates, or maybe even deliver a 25 basis point hike this September. And that brings us to step 3, the non-farm payroll report. Tonight's jobs data is the final puzzle piece the Fed needs. If the labor market is hot, well, those inflation fears are totally justified. But if it's cold, the whole narrative shifts. Section 3. Scenarios, breakout or collapse. Because right now, immediate short-term technical setups are currently at war with the long-term macroeconomic gravity of the US economy.
We are facing a massive crossroads here. In the short term, literally tonight, if that NFP data comes in positive and strong, it creates this massive bullish momentum. Buyers are going to flood in to defend the $100 mark, looking at a rapid target of 100.30. But if you look at the long-term, 12-month macroeconomic reality, major models from places like Trading Economics are pointing to a heavily bearish drop. Why? Because an inevitable US monetary easing cycle is on the horizon. This long-term gravity targets a drop to 99.00 by the end of the quarter, and then a really steep fall down to 98.13 within 12 months.
But, bringing it right back to the present moment, 99.902, we are standing directly at a true crossroads. The pressure building at this pivotal support zone is immense, and honestly, the dollar simply cannot stay here much longer. The coiled spring of the market is winding tighter by the minute. It's totally trapped between tonight's potential bullish explosion and the looming shadow of that long-term bearish easing cycle.
1930 Vietnam time. Mark it down, because at exactly 1930 tonight, the non-farm payroll data drops. That is the exact moment the paralysis breaks, and the market is forced to choose its path. The volatility in the minutes following this release, it's going to be nothing short of extraordinary. So, I leave you with this ultimate question to ponder as we approach the 0 hour. Breakout or collapse? Will the sheer force of a strong labor market shatter the ceiling and propel the dollar to 103 cents? Or will the long-term gravity of a weakening economy finally crack the floor, sending it tumbling toward 98? You now have the exact blueprint of the forces at play. Stay focused, watch that 99.90 tripwire closely, and enjoy the mechanics of the market in action tonight. Thanks for joining me on this Explainer, and I'll catch you next time.